Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. And one day later, we are literally no different from where we started, in this range just below the 786 of this impulse to the upside / retrace region. Rejection off of the 382 of this diagonal pitch fan to the upside. We've seen price trapped in since January. So are we going to make our way lower to the 236 and the daily support region of this August 15th range from 2022? That could be entirely possible. Let's go into the liquidity to see what's cooking. What is high block, you say? Well, people lock their liquidity into the charts to get burnt to a crisp for not using a stop loss. So we get to see where those crispy characters get burnt or will get burnt soon. So as it broke out yesterday after dropping down on false move Monday, they went down to the lows, took out some of the 100x pools pinged in some shorts to the tune of 77 million to the 42 million down in longs. So the imbalance was 30 million to the longs, so they came back, or to the shorts, so they came back and gobbled all of the 50x characters up into the region of 26,207.
Fatality.
And then they decided to, after that point, ping in those, after pinging in the longs, they just Bart Simpson right back down to those longs. And now we're just wick-whacking, accumulating. As they accumulate positions, they're accumulating liquidity to possibly shift out at some point to retrace into the candle. Let's expand our vision to the 7-day time frame to see where the liquidity lies. On the 7-day, it is slightly imbalanced to the upside with a little bit of immediate downside imbalance. So if they come down to that 25.7-ish region, they could peel out at that time. But overall, even Steven on the 7-day for the most part. As you start to expand your vision to the 1-month time frame, the 1-month time frame does have that little bit of happiness, double digits of billions down below at sub 23.6 to for basically $50 billion down there that they could come back to at sub 24. This is also seen on the 3-month time frame and the 6-month as well. You see these double-digit pools of 50 billion plus down below 24.4. Same with the 6-month. This is why we're looking at the idea of this A wave with a B consolidation and a C possible continuation into this region, because there's a mighty large amount, $180 billion at 24.3, to be taken on the 6-month time frame and above. If you look at the previous 2-year time frame, we had $241 billion down at 24.4, which they came back to with that SpaceX sell-off event, and then now are they going to come get this $233 billion at 23.6? It could be in the cards before they decide to shift out. The previous time they did that was back here, 19K, Silicon Valley Bank failure, but there was less liquidity down here, but they still went and shifted up to that 178 billion at 25.6. All right, let's go back to the monthly time frame where that imbalance down below lies, so we can keep our eyes on the prize and go into the charts on the Binance chart. So we were talking about a little bit of a hit to the downside, which did ensue, and they bounced off the 1382 of this bearish trend-based fib level. So this bearish trend-based fib level has been respected thus far, and they came down into this 1382 at 25,829. They broke 26K and then brought it back up. So let's delete this and refresh our ideas and try to find out where price action wants to go. All right. Let's turn on our oscillators, link in the description for more. And you can scroll to, you can hit the features button, toggle everything, see what it looks like in its entirety. Wait, what? It didn't load everything. That's weird. Strange. I interrupted it while it was loading, I guess. How is the NQ going? Let's see. Hold on. Let me make sure this is loading properly. It's not loading. Is my internet all right? Oh, we're getting a little bit of red on this. I don't know why. Either way. All right, there we go. Scroll down to features, toggle everything at your leisure, or read about each component as we go over them. All right, so we did talk about this baseline cross-up event on the daily time frame and how that could give you some upside action if and when they come down into this region. We were talking about the idea of possibly reaching a double bottom of some sort to come up into these vector candle regions, which we have labeled for you at 27.1 and 27.476. So as it stands currently on the daily time frame, we are getting this cross-up event of the baselines, which are your first sign of reversal. If we look at the daily oscillator here, the daily has come down. Also, the 3-day closed today as well. So you reset some of this Williams goodness here with the stochastic RSI and the money flow and the RSI beneath 50 here. You could be getting some 3-day play that starts to insinuate a cross up after this large cross down event on July 24th, which has been seen steady suppression of the price since then. All right, so looking at the 22-hour, let's just try to see if there's any information we can glean off of that. One interesting thing is right off the bat, you do see this angle to which the cloud is insinuating a curvature here. The turning of it has also staved off a little bit here. So are we going to start to see a shift on the 22-hour time frame away from this bearish sell-off, this purple? The cross-up event on the 22 is also still intact. If we go to the 12-hour, that cross-up event from this candle buyback that we also said would occur back here is still holding. We have the 12-hour double top and the rising sun event finally starting to occur here on the 12-hour time frame. Money flow coming above the RSI. The RSI is inching its way up to the money flow, but still at some point the money flow could come down to greet the RSI, which is what that subtle fatigue implies here on the 12-hour time frame. If we look at the 6-hour, 6-hour had previous bullish divergence on the money flow and the RSI, so that is what you're starting to see play out. We were talking about it needs to come above this cloud. So the cloud on the 6-hour time frame is thin, and the location, just to highlight where it is right there. So the price action has, with the last 6 hours, come up above and closed above the cloud. So, and you got this cross down, cross up event. So we could be seeing this could have been a shallow pullback to then send it to these regions. You have different extended MW patterns. If we go, let's find where that is. Do I have it here? No, I do not. But yeah, basically you have different types of double bottom ideas that you don't always have to come to the equal lows. You could come as a shallow W out as well. So this could be where we start to reclaim and make our way up. The bearish super trend level has been holding since last week, August 17th, and this super trend needs to break as well for any type of conviction to the upside to be true and realized. Got rejected off the previous Thursday jump up to this level and sell off at the super trend idea. So the reclaiming of this cloud is interesting to note. We have 5 hours for this candle to close, so a lot could occur in that time. 6-hour time frame also attempting to rise up here with that 12-hour subtle support, but that money flow above the RSI on the 12-hour is worrisome to me. If we look at the 4-hour here, the 4-hour also attempting to reclaim the cloud, but every time it does, gets steady sell off, sell off, sell off, rejection, sell off, sell off, sell off. Are we going to reclaim this 4-hour cloud and start to make a conviction to the upside? Your safe play would be if it comes out of here and then comes back, and then you wait for that cloud shift in this manner like this, and then you wait for that confirmation play. That would be your ideal thing rather than trying to scoop the bottoms. But on the 4-hour time frame, this last little leg up on the value from 82 and above, if it is going to break through, this MACD still has some legs to break into the domain of the stochastic. This leading MACD formula traverses both domains of the Williams and the stochastic domain. So when it comes up through the 0 level up into this region, it can suppress the 4 hours. So if you look at times in the past, it did that. Here, breaks into the 0 level, gets rejected, comes back down, and then decides to burst through into the stochastic realm, and that's what sends that 4 hour into a tizzy to the upside. So we could be getting that at some point if this gets rejected off the 0 and holds. MACD lines are crossing up on the normalized MACD formula of the 4 hour time frame. Remember, Asia likes to pump a dump, so they very well could bring it up to here to only bring it lower as well. So I'm not sold on the idea. If Asia is leading the charge to the upside, most likely they are going to take it lower. But this is what you would need to see in terms of conviction and a retrace to see that to be a true move to the upside. Just like here, it did not hold this conviction play to the upside. It burst through the cloud but came back and failed the cloud. So we've been waiting for that to show some conviction here. If we go to the hourly time frame, hourly time frame had previous bullish divergence off this drop yesterday and started to play out on the hourly, ambiguously starting to come up from the 50 level. Not my cup of tea for a region, but this is what happens in range plays. It just randomly ranges sideways, and so far we've been doing that for 11 days now. So this is the 11th day in this range beneath the 786 of that impulse. Generally, if you were going to see a move to the upside, this consolidation is generally a liquidity trap. So they would go, if they were going to go long, they would go and sweep the lows and then go higher if that were the case. If we look at the liquidity down below, there are some liquidity pools down at 25,788 and thickened up down in that region. Also on the 7-day, let's go ahead and look at those pools in more detail. You got basically 10 billion down to the 25.5 region, 12 billion down to 25.5. So if it goes down to here, sweeps all that goodness, it then has the permission to go sweep into the candle. This is why we're expecting some sort of sweep to this low, this deep retrace pocket region off of that rejection of the 4 hour. We're going to see how this reclaiming of the 6 hour cloud holds. So far so good on reclaiming it, but the even Steven nature of this has yet to shift in a upwards manner. But when you get these thin clouds representing weakness or consolidation points, keep in mind when the cloud thins, a potential expansion or reversal is in. So are we going to get an expansion from this 6 hour cloud? I think Tuesday and Wednesday shall be interesting. Perhaps we will get that burst to these pools and a pullback. Perhaps. So let's go into the total. Somebody was asking about NASDAQ and Matic, so we'll go over that for a bit. NASDAQ was seeing a little bit of a retrace over the last week here. From August 1st, basically, we've been retracing down for the last 2 weeks into these pools here as people took profits on Nvidia. We surged back up last week only to give it back in a day, and now we are consolidating in this range. Still respecting the 236 level of possibly going lower. of a bearish trend-based fib level. The DXY also reaching up into this range level, hasn't really come down beneath this, but the cloud baseline crossing down and potentially coming down into one of these bullish trend-based fib levels. If we look at gold, gold was previously coming back into this golden pocket region. We saw some rocket ship a few weeks back that's starting to play out as people start to think about value-based assets. And yeah, if we look at the hourly for this, let me just remove this really quick. It's the Asian session. So London was on holiday yesterday, so they did not have a London session. So are we going to see a retrace back up into this vector candle and higher after taking out the sell side? Are we going for the buy side up here, or going to continue down into these deeper retrace ideas? All right, so let's go look at total real quick, and then we'll go look at 𝗏𝗏𝗏 for everyone. So we saw a holding of this fib level. Let's go see what that fib level is. It's the 2 level of this bearish trend-based fib from back here. This impulse retrace contained the math, which led us to this region at 2. We've had that up since July. So we've been crypto has come down, the total market cap has come down to this nearly 1 trillion even level. It went as low as breaking $1 trillion and now came back into this region. I keep seeing this potential diamond bottom idea. I would expect some sort of consolidation, or at least coming back into the vector candle to recover some of the liquidity, as we mentioned on Bitcoin. So at some point, the surge up to that inside that vector candle would not be uncalled for. We needed to see this cloud hold with the price action above it, and that is starting to happen. So with this last 6-hour candle close and this one starting off in this point, if you want to basically take a stab at something short term, you could basically see whether they do come up into this region for Tuesday, Wednesday's play. So as they develop the liquidity pools, if you look at the overall total 3, which excludes Bitcoin, we've been consolidating at the 1618 and the 1382 region, and we are also starting to reclaim that cloud with the last 12 hours. So is that going to hold? I don't know, but that's where things begin. So it's something to take note for sure. If we look at the Bitcoin dominance dropping beneath the cloud here, and the USDT dominance dropping beneath the cloud. As the USDT dominance drops, people put their USDT into trades, potentially speaking. So if it's going below, this means people are putting their USDT from off the table on into trades. Let's look at 𝗏𝗏𝗏 and see if 𝗏𝗏𝗏 can give us a little bit of a clue of what's in store. The last time we were looking at 𝗏𝗏𝗏 was back in June, and it did hit that target of the bullish trend-based fibs. We're going to remove all the drawings and start fresh. Let's start from the bigger, higher time frame. So you're getting the daily cross up just like Bitcoin in terms of the baseline cross up event, bottom of the Keltner channel. You got a 10% move to break the daily bearish super trend. So until you can make 10% gains up on 𝗏𝗏𝗏𝗏, you're basically still in a bearish super trend on the daily. If we go to the weekly time frame, we came back to a previous level from 2022 in June. So this sweep, double sweep of the lows is also potentially a double bottom on the weekly. You got 3 hits in this region. Technically, you have some more pools down here to hold on. Technically, I have some pools still to sweep if it goes for that extended leg down, but we're not necessarily banking on that. The cross down event of the weekly time frame back in March has seen steady suppression on 𝗏𝗏𝗏 since March. So that baseline cross down event had you at hello on the weekly. Same with the cross up event back in June 2022. It's been steady up from that point until March 2023 when it started to come down. So the reclaiming of the cloud needs to occur for the weekly time frame to be bullish in any way, shape, or form, which would take you up 49% plus. If we go to the 3-day time frame, 3-day time frame previously had a cross down event similar to Bitcoin in August, and then we had that slight drop down, not as bad as it could have been, to reclaim this wick here at 50 cents even. We didn't reclaim it completely just yet. If we look at the daily time frame for that cross up event on the daily seems to be playing out. You have a lot of oversold indicators on the daily. The daily could be playing out here alongside the 3-day. The weekly also in a good manner here. If we start to go deeper into the time frames, let's go see what 𝗏𝗏𝗏𝗏 looks like on the lower time frames. 22-hour also crossing up. You got a thick cloud of purple that has yet to abate, but the angle, similar to Bitcoin, is slightly curving here. You could be starting to build a narrative shift out on the 22. If we go to the 12-hour, most likely you'll see the same. The curvature ever so slightly changing in a manner here, but still thick in nature. Has a lot to stave off. Interesting to note, we had some rocket ships close on the 12-hour time frame, and from that point we've taken off from the rocket ship. Shout out to any of the momentum master traders with the rocket ship alerts. Had some previous money flow disparity here on the 12-hour time frame, similar to Bitcoin, where the money flow is above the RSI. Had some bearish divergence of that, and so far it has not come down. It's been steadily trying to bring the RSI value up on the 12-hour time frame. If we go to the 6-hour, we have reclaimed the cloud similar to Bitcoin in a more readable manner here. So this curvature is quite nice. This is what we like to see in terms of monitoring a steady trade when it starts to reclaim and hold with the baselines intact beneath the price. This is a good monitor of what a good trade may be looking like in terms of a long. If you go to the 4-hour time frame, 4-hour time frame also shifting the cloud here and moving out. So this is a more readable chart. We still are flirting with the bearish super trend level, not reclaiming that level just yet, but one step at a time is where it starts to occur, and you're starting to see this shift and reclaiming and this break through the cloud, retest, and possible continuation idea for 𝗏𝗏𝗏𝗏. You had the previous rocket ship that had closed on a 12-hour time frame as well. If you were watching that last Tuesday, that would have been a perfect entry zone. Cloud starting to shift here on the 4-hour, going down into the hourly time frame, starting to see some volume enters, hence the cloud getting thicker here. Previously thin cloud getting thicker with this vector candle entry here had a huge volume spike here, and getting some bullish divergence, hidden bullish on the money flow just before that, hidden bullish, and then getting some bearish divergence into resistance here, but still holding. Let's go look at the liquidity for 𝗦𝗥. I believe we can do that for the 1 minute time frame. So let's do that for my man, and then we'll bid you adieu. Let's see, 𝗦𝗥. Ah, the rockets. Yeah, the rockets are pretty good. So here we go. So 𝗦𝗥 had that huge volume spike, most likely an exchange based on how much liquidity they were taking here. At that time, there was a $29 million imbalance to shorts. So they burst through, took all of the shorts, said thank you very much. And then there was some positions to the tune of 6 million, and they had an imbalance of 68 million in longs. So they came back into the long liquidity. Boom, they gobbled all that. And then they started to build up some shorts and came back into the shorts. Currently, you're imbalanced to longs to the tune of 63 million. Small positions, nothing over $1 million by the looks of it, except down here. There's a $3.57 million 25x position down at this long band here. But they could keep squeezing the shorts. We can't see the higher time frame for 𝗦𝗥. This is as far as it goes. Lost to father time, but there are likely some more pools up above that they could come back into. You do have these $3 million characters up above, and the thick bands still insinuate coming up to that 50x pool up at 56.9. So you could get a stab up to that 57 cent region, 57 cent, come up to the adaptive here on the hourly. So this adaptive, since we reclaimed the weighted moving average, this purple teal cloud, I'm going to remove this yellow curvature just to make it clearer. So you have this purple teal line. This is your 200 weighted moving average, and then you have this orange line. This is the adaptive moving average. So after reclaiming this, we burst through and we reclaimed the weighted, and the next move on the menu next up is the adaptive. So if we can come up to this adaptive, that would also insinuate that pool at 57 cents, which is, you know, a cool 2% or so. The cloud is still healthy, and we're bouncing off the cloud, so there is a target that they're looking to liquidate at some point, possibly the range high of this for initial stab in the shorts that opened up there. So I'd look to see what happens at the adaptive moving average on the hourly. And what is the adaptive, you say? Well, if we look here, it's a sensitive yet stable moving average, which factors out noise and displays an accurate place where price will experience resistance or return to for support. Think of it as a second line of defense or hurdle to overcome. So similar to it breaking, hitting this and consolidating, it might do the same. Go up to it and then pause. So look for a pause potentially on the adaptive moving average, and that also coincides with that top of the Keltner channel here, and you're meeting with that 4-hour super trend resistance. So until we can get above that super trend and close a 4-hour candle above this bearish super trend, this bearish super trend has been valid since August 15th. So until we can negate that on 𝗦𝗥, it's still in a bearish overtone. And of course, everything adapts to that moment thereafter, looking at the higher time frame, whereas that adaptive and weighted we have yet to reclaim on these time frames above. So the hourly time frame. So it looks like 𝗦𝗥 wants to make a little bit more of a stab to the upside, which might include what's going to happen with BTC. Let's go back here. Hopefully that made a little bit of sense. So we've essentially been range trading for 11 days, similar to back here. We range traded for, I believe it was 20 plus days, 55 days. Wow, was it 60 days? So it was like 30 days here and 30 days there. So there's no guarantees that we will go up even into this vector just yet. They're building liquidity as the interest in crypto has waned and the confidence has taken a hit by retail. There's less liquidity to grab so quickly, so they have to let it build slowly over time and get people convicted to a bias in one side or the other. So essentially you could be range trading this with a tight stop and then scalping profits in between. Yeah, so essentially you need to get above this cloud on the 4 and the 6 hour and close the 6 hour candle with conviction above this cloud. So this is the thing we'll be looking at, the 6 hour candle in the next 4 hours 44 minutes. In 4 hours 44 minutes, does it close beneath the current level it's at 26,130 or not? If it can close and continue to close above this level, you can start to make your narrative shift to the upside. First you'd have the shift, and then once you have that shift out in a way like this, then you're going to have a pullback, and then after the pullback you're going to have some strength behind it, if that is true. And then after the pullback, that's where you try to look for a idea if it does hold. So first you have the shift, and then the pullback, and then the strength move. So are we going to have that? Let's just see how this 6 hour treats us. We do have a 6 hour cross up event which has been closed as of this last 6 hour candle, and the volume which entered last night in New York session. So we could be seeing a shift to the upside here that could have been as much downside as they gave. There could be a liquidity grab before that. I wouldn't be surprised if they'd go down before they go up. But overall, Tuesday, Wednesday could be seeing some upside here. If we look at NASDAQ one more time, this also could be breaking the bearish sentiment here if it goes above the 236 here at 15,114. We're getting a cross-up event as well on the 6 hour, reclaiming the cloud too. So this could have been the trap to get people bearish, and then we start to make a double top inbound for the NASDAQ. I don't like to keep a bias for NASDAQ because it's so liquid and volatile that it doesn't really matter which direction as long as you catch the proper momentum, but it could make a stab at these daily levels and reclaim some of this liquidity, the sell side. The buy side liquidity, yeah, buy side liquidity up above. And that's my story, and I'm sticking to it. And we are starting to get a resistance level for the DXY at this range, this daily range. So we can cross down event, so we could start making a retrace ever so slight down into these regions before bouncing off of super trend. The super trend on the 6 hour has been holding since July, so this is something to note. Can we hold this level or not? All right, that's my story, and I'm sticking to it, folks. I thank you for your time, and thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and I'll do the same, bring in the fire, the accuracy, the precision, all that fun stuff, and I will catch you on the flip side. Peace.